Hi, I'm Krista Barton with Team Logue and Remax Escarpment, and I'm here today with my colleague Cathy Erskine, who we like to think of as our financial guru on the team. Cathy keeps us up on current events and she reads a ton of content to keep us in the loop. So Cathy, what are you reading these days?
Well, like you say, Krista, I'm sort of a little bit of a current event junkie. I read a couple papers every day, both Toronto paper, I have a hard copy and digital, and I keep in touch with either my past colleagues, people that I've worked with in the industry, so I kind of really chew into all this financial stuff that's happening in the market, and there's a variety of opinions of what's taking place. We do have the Bank of Canada rate, and my thoughts from what I'm collecting at this point is there's a stronger likelihood that will likely stay steady and the rate will hold. Now, this is like predicting the weather. There's no magic ball, and there's a lot of indicators that do make a difference in this, but there just seems to be leaning a little bit more towards that. The Bank of Canada, their mandate is to control inflation, and inflation has come down recently, marginally. Inflation is now at 3.8, so it's come down from 4%. So it's still high. Bank of Canada is trying, their aim is to go between 2 and 3%.
In terms of the different outlets that you're reading through, so there's usually going to be outliers to the positive and outliers to the negative. So what are the worst case and best case scenarios that you're reading about right now?
Sure. So when I'm talking to a lot of the mortgage brokers or the lenders that we deal with, their concerns are just the volume of renewals that are coming up over the next little bit. And that reason happening is back in 2019, there was a real uptick in the number of people applying for mortgages. I myself bought a new construction at that time. And then COVID hit, and in 2020, it picked up again in the late fall. So 2024 to 2025, we're going to see an enormous amount of renewals, whether you're a 3-year or whether you're a 5-year. And that's going to change affordability for what people can keep going forward or what they can purchase going forward. So that's going to have an impact. So supply is changing, supply and demand is changing, and that has a real change in the trajectory of where we're going.
So from what I understand, if the inflation rates come down to that 2 to 3% level, the likelihood is that we could expect them to continue to remain flat, or at what point do we start potentially seeing rates come down?
Again, Bank of Canada. So the Bank of Canada, they want their aim is towards 2 to 3%. I think that's very difficult to try to do. From the people I'm talking to, they're saying that interest rates possibly, and it'll all depend on world effects and other things that have an impact, is next midsummer to fall is likely the first that we'll see of any decrease or rollback. Okay. So that has a difference in your purchasing power. So good and bad. If you're a buyer, we're seeing a lot more product come to market. Mm-hmm. Because people are making decisions. People are saying, all right, I want to downsize, I want to capitalize on what's happening at the market, or they're making lifestyle choices, and they may be moving out of area. But this is where we work with our clients specifically and look at their big picture and say, okay, what are you trying to do? What's your objective? With buyers and sellers both have different reasons on why they're trying to move, and we can tell them what is happening in the market. Just the size of our team. We're 10 plus people on the team. We've got over 80 years of experience. We've seen these markets. We are not new to this, so we know how to navigate. We know how to guide our buyers, either with working with our lenders, working with our mortgage brokers. We know where to send them for the help they need, and as far as the market help, we're the ones that know really what's going on, just the volume of deals that we do.
That makes perfect sense. So you and I have both been in the business long enough. We've seen a few of these cycles, and we both know there's some strategies that sellers can take to make their properties just a little bit more appealing to buyers, because it's a bit of a tough market to sell right now at this moment. Obviously, we're optimistic about the future, but what are some strategies that sellers can implement right now to either make their property more appealing or to basically make their move more appealing, make it a little easier to move into that next property for them?
Well, some of the things that they can look at is just their mortgage, where they are right now. If they've got themselves a sweet deal because they've gotten the mortgage back early in 19 or 20, they may have a rate that is so appealing that A, they can port it to their next product that they purchase, or possibly it could be assumable, meaning that the buyers coming in may want to take that on.
Can you explain a little bit about porting, what that means and what the process looks like?
Sure. Not a banker, but just having some experience in this. So porting could be, when you have a mortgage, there's terms involved. So terms have if you could take the good rate that you have and you want to use that good rate on your next purchase, you can do that. But there's a time limit. So if you're selling a house in September and you need to buy by the end of December, that would be the term. Like there could be a number of days that you have from when you're moving out of one and moving into the next. The best thing is always to be talking with your lender, your mortgage broker, your financial institution, and look at the fine details. Just because you've got a good rate doesn't mean the rest of it is all similar to other people. So no mortgage is the same. And really what you want to do is sit down and talk with your mortgage provider. And if you need any guidance in that, I have sat down with clients as well and made sure that if they're not understanding, that I get them more information if I can explain it, and we help them. So it's not just the buying and selling of homes, we're full service. We do it all for clients. And we play on where our strengths are, and I've got strengths in the financial industry.
Which is fantastic and a really great asset for our clients and everybody that you work with. I've read your reviews. I know people love that about you. So just going a little bit back to the renewals that we're expecting coming up here, do we have a rough idea on approximately how many or what percentage of mortgages are coming up for renewal in the next year or two?
There's quite a few. There's quite a bit. So just from one of the larger banks I was talking to this morning, they're saying between 2024 and 2025, we're going to see anywhere from 35 to 40% renewals. So that's quite a bit coming to market.
So this is 35 to 40% of people who hold a mortgage currently will be renewing in the next year and a half or so.
Correct.
And what are the expectations on how many of those people may not be able to qualify for this renewal?
That'll be the difference. So during the pandemic, so through COVID, we found a lot of our clients were home saving. So that was great. Their savings accounts were really starting to do well, and that's why when we bust out of COVID, the buying market just took off. Like people were out there, they had additional money, they cut back on their expenses, they were spending less on gas and clothing and all that daily stuff, so they had more money and they went out and they did purchases, which is great. Folks that didn't quite purchase then had savings. They use the savings now. They're depleting their savings because things are costing more. So we have two different streams of what we're looking at. Some folks are downsizing and moving into a smaller product because it's more affordable. And some folks that have done well with their savings are capitalizing on this buyer's market that we're seeing right now. So it just depends where you're coming from.
So it sounds to me like maybe the positive message here is for that up buyer, the person who's looking to move into a larger property. It seems like they might have a little less competition.
Right.
Could be a really great opportunity for buyers in that market right now. What do you think about that?
The market is always changing, and we keep tabs on what is happening with the market, and right now it's a very strong buyer's market. So there's opportunity, there's choice, and there's room to negotiate, and there's room to add in conditions. Sale of property, your finance, your inspection. Those are things that we haven't seen at the beginning of the year, and come the summer they started coming back in. So it is a buyer's opportunity now.
That's really nice to hear. But I'm also seeing it's not necessarily something that's working too heavily against the sellers.
Nope.
We have a lot of sellers right now who purchased their properties in 2018 or earlier, and when you actually run those numbers, those folks are still ahead, which is a really great message that we're sharing with everybody as well. So what are some examples that you're seeing out there with your clients?
Absolutely, their equity has gone up. So if they look at what they've purchased it for to what it's selling now, the equity has gone up. If they're looking to do a lateral move, then it depends on their mortgage, depends on what their affordability is.
Sure.
The rates will have an impact on just what is possible, what's affordable.
So I guess it all has to be seen and to see where the future holds. Did you want to share any other thoughts on the mortgage market, on interest rates, or on anything that you're reading, any interesting tidbits that have popped up over the last little while?
Some concerns are just unemployment rate. So what has happened so far with why the inflation hasn't really been changing too much, the inflation rate, is because the job market's been strong. But in the last few weeks, there's a lot of in the paper that the large banks are starting to come to terms as to their cutting back. So we are going to see some real changes in the employment rate. So when the employment rate goes down, that's going to stop spending. And it's going to start curbing spending, which is what the Bank of Canada is trying to do. They're trying to curb our spending. They don't report to the federal government. They don't report to the municipal government. Their mandate, and their only mandate in the world, is to get inflation down. And it is trending down, but it's not where they want it yet. And by seeing what's happening with the economy, just the cost of groceries. Like we all know, if you go to the grocery store, one bag of groceries is not the same value it was a month ago.
So true.
It has changed considerably. So it's managing your spending, it's knowing what you're looking for, it's talking to advisors like us on Team Logue. We've got the experience, we've seen this before, it is not new to us. We have the connections within the financial industry to advise you properly. Working with us, you're a step ahead.
I would completely agree. I am slightly biased though. So, Cathy, I really appreciate your time today. We always appreciate that you keep us in the loop, that you keep us well informed, and that you give us a nice breadth of the opinions that are out there. I love that you're not one-track minded. You don't read one type of paper or one type of any sort of publication. So we're always very grateful for you, and thank you so much for coming today.
My pleasure.
For anybody that has further questions, you can find us on teamlogue.ca, and you can contact any of our team members. We're always happy to help.